Essay 510 Initial Audit Engagements Opening Balances. Essay 510 Initial Audit Engagements and Opening Balances. Opening balances include FS amounts and disclosures at the start of a period, like contingencies and commitments. Initial audit engagements. It refers to an engagement in which either FS for prior period were not audited or FS for prior period were audited by the predecessor auditor. It refers to the engagements in which either any of it will happen, that FS for prior period were not audited or audited by the predecessor auditor. Predecessor auditor means the auditor from a different audit firm who audited the FS of the entity in the prior period. What is the objective of the auditor with respect to the opening balances? So auditor has to obtain sufficient and appropriate audit evidence whether opening balances contains any misstatements that materially affect the current period FS. Opening balance contains any material misstatements that affect the current period FS. Second, appropriate accounting policies are reflected in the opening balances, and if it is consistently applied in the current period also, if there is a change, it is properly accounted or disclosed as per AFRF, applicable financial reporting framework. So what is the objective? Objective is to obtain sufficient and appropriate audit evidence that the opening balance contains any material misstatement that affect the current period FS, as well as appropriate accounting policies are reflected in the opening balance, consistently applied in the current period FS. If any changes, then it is properly accounted and disclosed as per AFRF. Obtaining sufficient and appropriate audit evidence about opening balance. What does it mean? Sufficient and appropriate audit evidence about the opening balance. Determine whether the opening balance reflects the application of appropriate accounting policies. Opening balance reflect appropriate accounting policies. Whether the opening balance reflect the application of appropriate accounting policies. Determine if prior periods closing balance are correctly brought forward. Prior period closing balance are correctly brought forward as opening balance. Current period opening balance. Or any adjustments are disclosed as prior period item in the current year P&L. If it is properly disclosed, prior period item in current year P&L. Performing one or more of the following. Where prior year FS were audited, where prior period FS were audited, reading that if it is already audited, reading that audited FS. Evaluate if audit performed in current period provide evidence of the opening balance. Current period audit provide the evidence of the opening balance. Current period audit provide evidence of the opening balance. Performing specific procedures to obtain evidences about the opening balance. Performing specific audit procedures. Then, what are the procedures for opening inventories? Example, observing current inventory count and reconciling to the opening inventory quantity. Performing procedures on the gross profit and cutoff. Performing procedures on the valuation of opening inventory items. Performing procedures on the valuation of opening inventory items. Then, so next topic is prior period FS audited by predecessor auditor. If prior period FS are audited by predecessor auditor, current auditor has to obtain sufficient and appropriate audit evidence regarding the opening balance. How can we obtain? By pursuing copies of audited FS of prior period, by reading or going through the audited FS of the prior period. Can the current auditor can rely on the closing balance of prior period FS? Can relay, can place relay except if during the current period possibility of misstatement in opening balance is indicated. Possibility of misstatement. First of all, they have to obtain the sufficient and appropriate audit evidence about the opening balance. About the opening balance, how can be obtained? By purchasing copies of the audited FS of the prior period. Then he can relay or can place reliance on the closing balance of prior period, except in the current period. During the current period, if there is a possibility of misstatement indicated, he cannot relay. Then modification in predecessor auditor's report. If there is a modification, or the opinion expressed is modified in the predecessor's report, then what we can do? We have to evaluate. We means auditor has to evaluate the effect of matter giving rise to modification with respect to current period FS. If the modification in the previous period affect the current period. If the modification is relevant and material to the current period FS, auditor shall modify the opinion in current period FS as per SA 705. So first of all, consider if there is any effect of prior period modification in the current period, and if that modification is relevant and material, then he has to modify the opinion as per SA 705 in the current period FS. What are the things that are need to be communicated with management and TCWG? First of all, we learn in objective that we have to obtain sufficient and appropriate audit evidence that the opening balances contains material misstatement that affect current period FS. If there is any misstatement in the opening balances, then auditor has to communicate to management and TCWG about the evidences obtained of the misstatements. Second thing is that if that misstatements in the opening balance affect the current period FS, then auditor has to communicate this matter to the TCWG or the management. First of all, or if any misstatement in opening balance, he has to communicate. If that misstatement affect the current period, then he has to communicate that also. Then the third thing is that the auditor shall perform additional procedures to determine effect on the current period FS. If the auditor perform any additional procedures to understand that effect of that misstatement, so that also they have to communicate with management and TCWG. Now moving on to the reporting part. If there is any misstatement, material misstatement in the opening balance, then auditor has to communicate qualified or adverse opinion. Or if there is any inconsistency in the accounting policies applied from prior period to the current period, or if there is any accounting policies in the opening balances are not appropriate, in that case have to express qualified or adverse opinion. First case, misstatements in the opening balances. Second case, accounting policies are not applied properly in the opening balances and not consistent in current period, not consistent with the previous period. Three cases have to express qualified or adverse opinion. Then, if auditor is unable to obtain sufficient and appropriate audit evidence about the opening balances, in that case, unable to obtain sufficient and appropriate audit evidence, therefore they have to express qualified or adverse opinion as per SA 705.